Hello, wealthy, successful, money-making traders. This is your trader's friend. Thank you for joining me today for another video. Guys, I'm so glad you can be here with me. And today I want to talk to you about the reasons some traders fail in the market. And this list is in no particular order. And I so do not believe that 90% of the people who trade in the market are failures. And I was going to say, I'm going to update my stop loss, but now my stop loss is under this candle as opposed to this one. So I am going to tighten this stop loss just a wee bit. Now this trade is moving along rather nicely. I actually bought this trader after the break and close of this 200 SMA and this 10 SMA, and I have been moving my stops under the pink candles as price has been moving in my favor. But I was going to tell you something, but it totally slipped my mind. But one of the reasons that traders fail at trading is because they don't take this seriously enough. People have the idea that it's easy to get in the market and make money. However, trading is simple, but it's not easy. And I will tell you why, for me, it is not easy. And I am going to adjust that stop. Give me a sec. So traders, oh, it looks like maybe I'll get stopped out in this, but I'll at least have 20 pips in this trade. So I've moved it to about 50 something as far as the stop. But this is a more rare sweet trade that I'm in currently, and I certainly don't want the market to come back and take all of my profits. But sorry, I apologize to you traders. I certainly did not expect for the market to render this kind of sweetness this morning. So because it has, I've just been moving my stops accordingly. And that's the thing about the trades that you enter. You don't know which one of them is going to do this. So it is definitely a rare treat for me indeed. So I apologize to you. Oh, all right, traders, I was just stopped out of that trade. We got about 40 pips out of that. And so now I have to wait for the next trade setup. And this very well could be it, but I'm going to go ahead and settle with my 40 pips. Now the market may continue to go on to produce 200 pips. That actually seems like a very valid trade setup. An attempt to take price to the downside that fails. However, I have been stopped out, so I have to wait for the next trade setup. So sorry about that. I did not expect the market to do that. I'd gotten in earlier on this trade, and I expected more of that same kind of stubby price action. So this trade setup certainly did not yield what this trade setup did. So I didn't expect that when I started making the video. But I was saying that traders don't take their trading seriously enough. They seem to think of this as easy money, and trading is anything but easy money. It's simple, but it is not easy money, as most of your trade setups during the day are going to be fake outs. Most of the setups are going to be fake out. And the most serious thing I think that caused traders to fail is the belief that they need to be in the market all of the time. You do not need to be in the market all of the time. As a matter of fact, that is the most deadly thing that you can do as a trader. It's certainly more exciting than the prospect of just watching the market or waiting for the market to show you an advantage, because I will be honest, it's much more exciting for me to be in the market than to watch the market. Watching the market is like watching the grass grow, but that's part of the business side of the market. Just know that it's like watching paint dry, is like watching the grass grow, and it can be a challenge. It can be a tremendous challenge. But, and this goes along with everything else that I was saying, that traders don't wait for the proper trade setup. They chase every candle instead of waiting for a premium setup. And as a trader, when I get into a market, because I traded both, I was looking at the way the market was going, and I got into this trade, nice breaking close below that 10. But pretty soon, once I get into profit, guys, I go ahead and I try to not take a loss in the market if at all possible. But I still take losses because I can get into a trade like this, and then the next candle can come up to engulf that price action, and then that is a failed trade. So um, another thing that causes traders to fail is their inability to take a loss, and to take a loss properly. And what I mean by taking a loss properly is the size of the loss. You must learn to take little teeny weeny losses. Now, this trade worked out, and this trade worked out. This trade actually was a dream trade. But this is the kind of trade that you're going to probably get once a day or twice a day. And if you trade like me, you're going to get stopped out. You're going to get stopped out. And that's what the market does. The market is there to take money out of your pocket. It is not your friend. It is not your comrade. So it hurts traders into positions. And when you get the most traders monetarily, so let me just give you an example. The market says there is $500 million on the bearish side. So what are they going to do? They're going to try to trap that $500 million. If you have $500 million on the bearish side and 30 million on the bullish side, they're going to go with that to try to get that $500 million. They're not thinking about the $30 million that's out there when there's 500 million to be made. 30 million is peanuts. So they purposely herd us into these traps. They do it all day long. These are professional trappers. This is what they do for a living. So they are out to trap you. I know this is more of a kind of talky video more than strategy, but you need to know what it is that you need to do to be successful in the market and to create the kind of life that you want. And the most important thing that you're going to have to do is to wait on the market. You're going to have to watch the grass grow. You're going to have to watch the paint dry, because there are times that you do not need to be in the market. Like right now, I am not in this market. I don't feel the need. Well, I got a really nice trade, so I don't feel the need to be in this market right now. And right now, even if I got a really strong engulf to the downside, I would not take it. Look at the distance between this 200 and this 10 SMA. So right now, I don't know. Like I said, the market can continue on for 60, 70, even 100 more pips. That I don't know, but I'm not going to get back into this market until I can see a clear advantage. And right now, making a video, I can't see a clear advantage. So I am going to refrain from being in this market for right now. However, if I did choose to get back into this market, my stop would be here. And, well, actually, by now it would be right there. So I pretty aggressively follow my stops. I'm pretty aggressive about that. And a lot of people say your stops are too tight. Uh, Sometimes I get stopped out with uh, 1 pip, sometimes it's 2 pips. However, for me, it's better than taking a loss because I used to be at that with that mindset that um, I'd rather it's better for it to hit my stop. It's either going to go to profit or hit my stop. I don't necessarily trade like that because that's not my style. That's other people's style of trading. And you have to find the style that is right for you. But one of the things that you must do to succeed in this market is to wait for the proper trade setup. That will be the hardest thing that you'll have to do. The second hardest thing that you'll have to do as a professional trader is to limit your losses, make them as tiny as possible. Now, chances are, after a good trade like this, I'm done. I'm done because chances are the market's going to chop for some hours now. And so I know for me, it's time for me to take a break. Other traders are still in there and they're probably going to continue to make money. I'm good with the 40 pips that I got out of this trade. I also got pips out of that trade. So I'm good with both of those. And you'll see, let's go back to this teeny tiny trade before this one. And you see what I mean? So if my stop had been there, I'd already be at a disadvantage in this market. However, I'm not going to take this to the downside. It may, oh, that looks so yummy. But I'm going to continue to make this video and show you, even with the previous trade, even though it did not yield what the new trade did, you can see that my stop, and I'd much rather have my stop in a bullish market because I set it right at the low of the previous candle. And then, as you know, that's where I got popped out of that trade. So then I'm done. The market's already said you've had enough. You're done for right now. So I wanted to show you with this previous trade. Let's just move that over. Take that off. So this is where I got in. That was my initial stop. Now, every trade setup is not like this. So that was where my stop was initially. And then as price continued to move in my favor, I was just moving my stops, moving my stops, moving my stops. But even in this one, and this is where it got really, really tricky. Even with this one, even though you did the break above this candle and that 10 SMA, you did not close above that candle. And you can see how you just continued to move until eventually you were stopped out in that trade. But that's right there at that 200. So these are places that you can probably expect to bounce. And I was out of that trade. So when this one set up, pretty much immediately, and usually they don't set up immediately, it's like, wow, that's beautiful. So I got into the trade, never knowing what I was going to get. But this is the thing. Look at this price action. A lot of times you just have these really choppy, long wait times before you can find a really, really, really good trade. Now, this one this morning, that one was good. And there's several that just are not good where you just have the chop. And in situations like this, I know this is a long video. I'm getting into stuff that I didn't intend, things that I repeat like every single day. But you want to move your stop under the big pink candle, and these are the big pink candles, and you can see how price will bounce along there forever, and it's really, really emotionally hard. That's the thing. Trading is psychological warfare. That is the hardest thing about trading. The warfare, the getting stopped out. Just say you got stopped out here and then you got stopped out there. If you're trying to trade the cross of that 10 SMA, you got into that trade, bam, you got stopped out. You got into that trade, bam, you got stopped out. And that's what's hard. That's why it's imperative as a trader to learn to take a teeny tiny um, stop out. Your stops have to be teeny tiny. And so every market for me is different, and it's different how I'm going to move my stops. Last night I was actually moving my stops below the low of the swings. However, once I get a profit, I definitely want to protect that profit as much as possible. So the thing, other things, and I'm going to get back on topic. I apologize. Other things that cause traders to not be successful in the market is their losses are way too big and their profits are too small. Profits are way too small. And you have to force yourself to stay in these trades sometimes. Well, you saw me do it this morning. It wasn't what I intended to do, but these are the things that are necessary for your success in trading. And they love the excitement of the market more than the discipline of the market. And I love the excitement of the market more than I love the discipline. Believe me, the discipline of the market is boring, is very boring. And I think that this is one of the things, because even after 10 years, I still struggle with this, that they are afraid that they're going to miss out. There are times that I'm trying to wait on the market to give me the setup, and I'm afraid that the market's going to leave me behind. Let me say this, there are always opportunities in the market. There are always opportunities in the market. And another thing that causes traders to fail is they refuse to cut a bad trade even after the market has clearly shown them that they no longer have the advantage. And they tell themselves things like, oh, it's going to come back. Um, what else? Yeah. Another thing. They move their stops. They move their stops because they're so sure that they are right about the trade. But the another thing that's hard about trading is trading the right now. Trading the right now price action. And that's another thing that traders fail to do. You have got to master the language of the market. That is imperative. Learn what your market is telling you. The market speaks a language that's unique. And I think most traders maximize their knowledge of oscillators and indicators and all of these things when the thing that's imperative for you to learn is your price action and to wait for trade setups. Now, when I'm in the market, a lot of times I have to mentally talk to myself. And when I'm looking at price, I'll say, oh, well, there is no trade. There is no trade. So I'll go do something else for a while, look at it. And when I say for a while, sometimes it may be 5 or 6 minutes. But sometimes I'll look and there just is no trade. And I have to tell myself that because I want to be in that market. And then when you got down here and you did that break of that 200, I told myself, oh, nope, I definitely don't want to sell at that point. Why? Because I'm not at a peak point. You are looking for sell opportunities at peak points. You are looking for buy opportunities in the valley, especially if in the valley you are going in harmony with the trend. So a lot of times, oops, thought I was moving that back. Okay, guys, I'm getting ready to shorten this video. I'm sorry. They're just things in the market that I wanted to show you. So in this valley here, you can see it did not yield nearly what this one did. So if you gotten in here with your stop under the big pink candle, if you moved it to make sure you in profit, you got stopped out. So you did not get this beautiful, surprising run up that I was able to capitalize on earlier. Guys, sorry this video was so long, but I want you to succeed in the market. And I don't want you paying somebody 10, 15, 50, $180,000 to learn this stuff that if you just invest the time, you can learn this stuff for free. One of my favorite books and the book that changed my trading life was Steve Nison's Japanese Candlestick Trading Techniques, Volume 2. Volume 1, I didn't like it so much. Volume 2 was a gold mine. I want to remind you that you can absolutely do this. And I'm thinking about getting back into this trade. It's looking rather good. But I do want to remind you that you can absolutely do this. You can be successful at Forex. Enjoy an amazing, wonderful, pip filled trading life.